Picture this, you're living your dream retirement stress-free with a cool drink in hand. Sounds great, right? But here's the plot twist. Did you know a surprise financial disaster could come crashing into your peaceful paradise faster than you can say, "I should have saved more"? Unexpected medical bills? The stock market suddenly doing its best roller coaster impression? Or maybe your neighbor's expensive emergency vacation? Yeah, all that could mess up your retirement plans. Before you start panicking or booking a second job as a part-time accountant, don't worry, there's a way to protect your savings from a retirement disaster. It doesn't involve burying your money in the backyard or turning into a coupon cutter. Well, unless that's your thing. We're diving into how you can safeguard your future even when life throws you a curveball. Let's get started. According to recent studies, nearly 40% of Americans have less than $10,000 saved for retirement. And that's before we even talk about the unexpected costs that can throw off your retirement plans. Now you might be thinking, I've got this, my 401k will save me. But here's where things get tricky. The cost of living keeps rising, and healthcare? Well, let's just say your insurance company doesn't exactly cover your dream retirement lifestyle. Unexpected financial ruin can sneak up when you least expect it, like that surprise medical bill or a market downturn that eats into your savings. Planning for retirement isn't just about saving, it's about understanding the risks that could derail your plans. We're talking about everything from inflation eating away at your purchasing power, to the increasing cost of healthcare that can blow up your budget faster than you can say Medicare. And let's not forget those fun moments when the stock market does its best impression of a roller coaster. It's tough to relax when your retirement funds are on a ride like that, right? Don't worry though. Understanding the retirement crisis and learning how to protect yourself from these financial risks can make all the difference. But first, we'll take a closer look at the risks you need to be aware of and how to build a strategy that keeps you on track. What do you think is the biggest risk to your retirement plans? Alright, let's talk about the risks that could sneak up and mess with your retirement savings. So, what should you be looking out for? First up, market volatility. You've probably heard about it and maybe even felt it in the pit of your stomach when the market takes a dive. The truth is, the stock market can be unpredictable. And while it might look good on paper over the long haul, those sharp drops in value can make a big dent in your retirement fund if you're not prepared. Then there's inflation. Think of it as that sneaky little gremlin that slowly erodes your purchasing power without you even noticing. What you could buy for $1 today might cost you $1.50 in a few years. Over time, that means your retirement dollars won't stretch as far as they used to. And unless you're planning to live on ramen noodles forever, you'll want to factor this in. Now let's talk about healthcare costs. This one's a biggie. Medical expenses in retirement can easily become the silent killer of your savings. Even with insurance, unexpected medical bills can pop up, and let's be honest, healthcare doesn't come cheap. It's crucial to have a plan to cover those costs, especially if you're dealing with long-term care or major health issues. And don't forget about unforeseen life events. These are the curveballs that can throw everything off track, like a sudden job loss, unexpected home repairs, or family emergencies. It's easy to get caught off guard, and these events can drain your savings faster than you might think. Let's not ignore the global economy either. Political instability, trade wars, or global crises can affect markets and impact your retirement plans in ways you didn't expect. Who knew your future could be so unpredictable? So what do you think is the biggest threat to your retirement savings? Drop a comment, and let's get talking. Stay tuned as we dive deeper into how you can protect your savings from these risks and keep your retirement on track. Picture this. You've worked hard, saved for years, and now you're ready to kick back and enjoy retirement. But what if life throws you a curveball? Health issues, unexpected home repairs, or, heaven forbid, a sudden market crash. These things can happen when you least expect it, and without proper planning, they can completely derail your retirement goals. The truth is, life is unpredictable. Sure, we'd all love to live in a world where everything goes according to plan, but that's just not how things work. That's why planning for the unexpected is a must. If you don't have a strategy for those rainy days, your retirement savings could disappear faster than your favorite snack during a movie night. Think of it like this. If you plan for the unexpected, you're like a scout, always prepared. But if you don't, well, you're like someone showing up to a barbecue without any ketchup. Not fun, right? Start by building a solid foundation for your retirement plan. You need more than just a savings account. You need a strategy to protect yourself against unexpected costs, like healthcare expenses, market volatility, and emergency situations that could arise. Think about it as preparing for a financial rainy day. You don't want to be caught in the storm without an umbrella. One way to do this is by setting up an emergency fund. This is your safety net for anything life throws your way. If your car breaks down, if you get a medical bill that takes you by surprise, or if you have to make unplanned home repairs, your emergency fund can cover these costs without touching your retirement savings. The key is to keep this fund separate from your long-term investments. It should be easily accessible and ready for action. Another important step in planning for the unexpected is making sure your retirement portfolio is diversified. Diversification isn't just a fancy financial term, it's your shield against market swings. If one investment takes a nosedive, other areas of your portfolio can help keep things balanced. And yes, a mix of low-risk assets like bonds or real estate, alongside your stock investments, can provide stability when things get shaky. Don't forget about insurance, health, life, and long-term care. Unexpected health issues can be a major retirement killer if you're not covered properly. Medical costs in retirement can wipe out years of savings if you don't have a plan. Think about it, you wouldn't go on a road trip without a spare tire, right? Well, don't go into retirement without the insurance to back you up. Planning for the unexpected is all about being proactive, not reactive. The earlier you put these strategies in place, the more prepared you'll be when life decides to throw you a curveball. So, what unexpected events are you most worried about affecting your retirement plans? Let us know in the comments, and let's chat about how to tackle them. By preparing for the unexpected, you'll enjoy a more secure and stress-free retirement, and the best part, you'll be able to live your dream retirement on your own terms, no matter what life brings your way. The stock market, that magical place where your money can grow, shrink, and sometimes vanish, all in the same afternoon. One minute you're riding high on your investments, and the next, you're wondering if your retirement savings will survive the next market crash. So, how can you protect your savings from market volatility? First things first, market volatility is inevitable. Stocks will rise, stocks will fall, and there's not much we can do to stop that. But you can take steps to protect your retirement savings from the worst of it. It's about mitigating the risk while still allowing your money to grow over time. One of the most important strategies is diversification. Think of it like throwing a party with a mix of people. Some are super chill, others are a bit wild, but together, they balance out. When you spread your investments across different sectors, industries, and asset classes, like stocks, bonds, and real estate, you reduce the impact of any one investment tanking. That way, if one part of the market takes a hit, the rest of your portfolio can help keep things steady. And let's not forget about bonds. They're like the calm, reliable friend who shows up on time and doesn't cause any drama. Bonds may not get you the huge returns that stocks might, but they offer stability when the market gets a little unpredictable. So, a balanced portfolio with a healthy mix of both is a solid strategy to protect against market volatility. Another key to protecting your savings is thinking long-term. The market can be wild in the short run, but over time, the overall trend has historically been upward. If you're investing for retirement, it's important not to get swept up in the moment and panic during a market downturn. Stay the course. A well-diversified portfolio will help weather those storms. Also consider your time horizon. The closer you get to retirement, the less you want to risk. That means as you age, you may want to shift a bit more into stable, low-risk investments like bonds and dividend-paying stocks. It's about protecting your nest egg while still allowing for growth. And here's a fun tip. Consider automatic rebalancing. It's like setting your portfolio to cruise control, so it stays aligned with your goals, even when the market does its best roller coaster impression. So, while we can't stop market volatility from happening, we can absolutely prepare for it. What's your strategy for handling market ups and downs? Share your thoughts in the comments below. We'd love to hear how you protect your savings. By using these strategies, you'll be ready to handle whatever the market throws at you, and enjoy a more secure and comfortable retirement. Ever been in a grocery store, grabbed a loaf of bread, and then had to double-check your bank account because you thought they added an extra zero? That, my friends, is inflation at work. Prices are rising everywhere. From groceries to gas to the cost of your favorite TV streaming subscription. And guess what? Inflation doesn't just affect your daily life, it can also have a big impact on your retirement savings. Inflation is when the value of money decreases, which means the same amount of money buys you less than it did before, and over time, this can significantly erode the purchasing power of your retirement savings. Let's face it, the $500 you save today might only be worth $400 in 10 years if inflation continues at its current rate. So, how do you fight back against inflation and keep your savings growing? One way to combat the effects of inflation is by investing in assets that outpace inflation. Historically, stocks and real estate have been some of the best performers when it comes to staying ahead of inflation. Over time, these investments tend to grow in value, helping you build wealth and preserve your purchasing power. Take real estate, for example. Property values and rents tend to rise over time, making real estate an excellent hedge against inflation. If you own property, especially rental property, your rental income can increase along with inflation, giving you a nice buffer against rising costs. Similarly, investing in dividend-paying stocks can help keep pace with inflation. Dividend stocks often increase their payouts over time, providing you with an income stream that grows alongside inflation. You're not just relying on the stock price to go up, you're getting regular payouts that can help offset rising costs in your everyday life. Another strategy is to take advantage of inflation-protected savings accounts or Treasury inflation-protected securities, TIPS. These are low-risk investments that are specifically designed to keep up with inflation. While they won't make you rich, they can provide some peace of mind knowing your money is at least growing at the same rate as inflation. Diversifying your investments is key to protecting against inflation. If you only have your money sitting in a savings account with a low interest rate, inflation will quickly eat away at its value. By spreading your money across different asset classes, stocks, bonds, real estate, even precious metals, you can create a more inflation-resistant portfolio. Also, think about creating multiple income streams. The more sources of income you have, whether it's through investments, rental properties, or side businesses, the less vulnerable you are to inflation's bite. If one income stream gets affected by inflation, you've still got others to fall back on. It's important to be proactive about inflation. You don't want to wake up one day and find that your retirement savings are no longer enough to cover the lifestyle you envisioned. Planning ahead and adjusting your strategy now can make a world of difference down the line. So, are you feeling the pinch of rising prices? How do you plan to combat inflation in your own retirement savings? Leave a comment below, we'd love to hear your strategies and tips. With the right strategies in place, you can protect your retirement savings from the effects of inflation and continue enjoying life without worrying about the rising cost of living. Let's be real, healthcare costs are a big concern for most people, especially when you're thinking about retirement. The last thing you want in your golden years is to face a stack of medical bills that rival your mortgage. So, how do you make sure your health is covered when you're no longer working full-time? Let's dive into the world of retirement healthcare. First, let's talk about the big picture. In retirement, your healthcare costs are likely to increase. According to studies, retirees spend a significant chunk of their savings on healthcare, and this trend is only expected to rise. Medicare will cover some of your needs once you hit 65, but it doesn't cover everything. You'll still need to plan for the gaps that Medicare leaves. Now don't worry, Medicare isn't a total flop, but it's like having a partial security blanket. You're covered, but not fully cozy. To fill in the gaps, many people turn to Medicare Advantage plans or Medicare Supplement insurance, also known as Medigap. These plans can help cover costs like co-payments, co-insurance, and deductibles that Medicare doesn't pick up. It's like having a backup plan when the primary plan doesn't have your back. Another crucial step is saving for healthcare costs before retirement. Health savings accounts, or HSAs, are one of the best ways to prepare for healthcare expenses. With an HSA, you can set aside money tax-free to pay for qualified medical expenses. The money you contribute grows tax-deferred, and when you withdraw it for medical costs, it's tax-free too. It's like a retirement account just for healthcare without the tax headaches. And here's something many people overlook: long-term care insurance. While it's hard to think about needing help with daily activities like bathing or dressing, the reality is that long-term care costs can be astronomical. The average cost of a nursing home can run up to $100,000 per year. If you don't plan for this, your savings could take a serious hit. Long-term care insurance helps cover some of these expenses, giving you peace of mind as you age. It's also a good idea to talk to a financial planner who specializes in retirement. They can help you incorporate healthcare planning into your broader retirement strategy. You don't want to neglect this part of your planning, because healthcare can become one of the biggest expenses in retirement. Remember, healthcare doesn't have to be a financial nightmare in retirement. By planning ahead and diversifying your healthcare options, you can reduce the stress of high medical bills and enjoy a healthy, comfortable retirement. So, what are your thoughts on securing healthcare for retirement? Have you already started planning for it? Or is it something you've been putting off? Drop your thoughts in the comments below. We'd love to hear how you're handling healthcare costs for the future. With a little research and some proactive planning, securing healthcare for retirement can become one less thing to worry about as you enjoy your golden years. Building a comprehensive retirement strategy is like putting together a puzzle. At first, all the pieces are scattered and it feels a bit overwhelming. But once you start putting things together, the picture becomes clear. So how do you turn that puzzle into a strategy that will help you enjoy a stress-free retirement? Let's break it down. Step 1 in creating your retirement strategy is understanding that it's not just about one thing, it's about multiple moving parts. A strong strategy includes savings, investments, healthcare planning, and even debt management. Think of these as the foundation of your retirement plan. Without these key components, you might struggle to build the retirement of your dreams. Let's start with savings. It's no surprise that your 401k, IRA, and other retirement accounts are critical to your strategy. The more you save early on, the more time your money has to grow through compound interest. Make sure you're contributing regularly and taking full advantage of employer match programs. Free money? Yes, please. Next, let's talk about investments. It's important to diversify your portfolio. Stocks, bonds, and real estate each offer unique benefits and risks. Having a mix of these can help reduce risk and maximize returns. But don't just throw your money at anything. Make sure your investments align with your retirement goals, risk tolerance, and time horizon. Now here's something many people forget when planning for retirement. Healthcare. Medicare won't cover everything, and out-of-pocket medical expenses can be huge in retirement. That's why it's vital to have a solid plan for healthcare costs. Whether that means a health savings account, Medicare supplement insurance, or even a long-term care plan, make sure healthcare doesn't sneak up on you like an unexpected bill after a doctor's visit. And while it's easy to focus on growing your retirement savings, debt management is just as important. The less debt you carry into retirement, the better. Focus on paying down high-interest debts like credit card balances early on. This will free up more money to invest and save for the future. Don't forget about tax strategies. Taxes can have a huge impact on your retirement savings, so it's worth considering tax-deferred accounts like traditional IRAs and 401k. You can also explore tax-free options like Roth IRAs for future withdrawals. Planning for taxes now can make a significant difference down the road when you're ready to tap into your funds. One of the smartest moves you can make is to sit down with a financial planner. They can help you build a strategy tailored to your specific needs and goals. Whether you're looking to retire early, travel the world, or just enjoy some peace and quiet, a planner will help you create a blueprint that works for you. As you build your comprehensive retirement strategy, remember that it's not a one-size-fits-all plan. Everyone's situation is different, so it's important to adjust your approach based on your individual needs and desires. The more tailored your strategy, the better prepared you'll be for whatever retirement throws your way. So, what's your strategy looking like? Have you thought about all these pieces, or is there something you still need to plan for? Drop a comment below. We'd love to hear how you're building your retirement puzzle. Picture this. You're enjoying a sunny day and suddenly, a rainstorm hits. What do? You grab your umbrella, right? Well, think of insurance as your umbrella for life's financial storms, especially when it comes to retirement planning. In the same way you wouldn't step outside without protection from the rain, you shouldn't approach retirement without a solid insurance strategy to mitigate potential risks. Now, we all know life can throw curveballs. Whether it's an unexpected illness, a major home repair, or even an accident, these events can cause financial havoc, especially if you're not prepared. That's where insurance comes in to soften the blow. It helps shield your savings and your future from risks that could derail your plans. So, what types of insurance should you consider for a comprehensive retirement strategy? Let's start with the basics. First, there's health insurance. As you get older, medical expenses can take up a large portion of your budget. Having health insurance, especially through Medicare once you turn 65, is essential, but don't stop there. Medicare supplement plans and Medicare Advantage plans can help fill in the gaps and cover things like copays and deductibles. Then there's long-term care insurance. As we age, many of us may need help with daily activities, things like bathing, dressing, or even managing medications. Long-term care insurance can help cover these costs, which can quickly eat away at your savings if you're not prepared. The cost of a nursing home can be staggering, $100,000 per year or more in some places. It's a risk that's not worth ignoring. Let's not forget about life insurance. While life insurance is typically associated with protecting your family if something happens to you, it can also be part of your retirement strategy. Some types of life insurance, like whole life or universal life, build up cash value over time. You can tap into this cash value if you need it in retirement. Plus, your beneficiaries receive a tax-free death benefit, which can be a huge help for your loved ones. Working with a financial planner to build your insurance strategy is key. They can help you determine the right amount and types of insurance based on your specific needs, goals, and lifestyle. Whether it's health insurance, life insurance, or long-term care coverage, a planner can ensure you're fully protected without going overboard on unnecessary policies. Of course, no one wants to spend more on insurance than necessary, but cutting corners in the wrong places could leave you vulnerable to financial risks down the road. Balancing your premiums with your potential risks is the sweet spot. For example, you might decide that adding a higher deductible on your health insurance could lower your premiums but still give you peace of mind if a major medical event occurs. Now, if you want to go the extra mile and make sure you're fully protected from life's unexpected storms, consider umbrella insurance. It's like having an extra, super large umbrella that covers you for things like personal liability in case of accidents, lawsuits, or other unexpected events that could put your savings at risk. It's one of those things you don't think you need, until you do. By mitigating risks with the right insurance, you're setting yourself up for a more secure, less stressful retirement. The more you plan now, the less you'll need to worry about those unexpected financial downpours later. So, how's your insurance strategy looking? Do you have all your bases covered, or are there areas you need to look into further? Let us know your thoughts in the comments. Remember, life happens, but with the right insurance strategy, you'll be ready for whatever comes your way, rain or shine. Retirement planning. It's not just about numbers and percentages, it's also about how it makes you feel. You know, the psychological impact of retirement planning is often overlooked. Sure, it's important to know how much you need to save, but it's also crucial to understand how it can affect your mental well-being. Trust me, it's a bigger deal than you think. First off, the idea of retirement can stir up a mix of emotions. For some, it's excitement, finally the chance to relax, travel, or pursue hobbies. But for others, it can bring up stress, especially when you're unsure if you've saved enough or if your retirement savings will hold up. It's that feeling of uncertainty, and it's completely normal. The pressure to save enough can be overwhelming. If you're constantly calculating how much you should contribute to your 401k or IRA, and stressing about the stock market, it's easy to feel like you're on a hamster wheel that never stops. But it's important to recognize that financial stress is real, and it can take a toll on both your mental and physical health. One way to reduce that stress is by working with a financial advisor. Knowing you have a professional guiding you through your retirement planning can give you the confidence to make the right decisions. It's like having a map for a road trip. You may not know every turn, but at least you're not lost. But here's the thing, it's important to take a step back. Instead of getting caught up in the numbers, take some time to focus on what you want out of retirement. Do you want to travel? Spend more time with family? Or maybe start a new hobby? Retirement planning isn't just about how much money you'll need, it's about how you envision your life after work. One trick for dealing with the mental load of retirement planning is mindfulness. Taking a few moments each day to relax and reflect can help reduce anxiety. Whether it's deep breathing, meditation, or just taking a walk, a little mental clarity can go a long way in easing retirement-related stress. Plus, you'll be more focused and productive when you do tackle those retirement goals. And don't forget about the emotional rewards of planning. When you know that your savings are on track, it's easier to enjoy the present without constantly worrying about the future. A solid retirement plan can give you peace of mind. knowing that your financial future is secure, and that you can focus on what matters most, like spending time doing the things you love. Retirement planning doesn't have to be stressful. By focusing on your goals, breaking down the numbers into manageable steps, and making room for relaxation, you can turn retirement planning from a source of anxiety into a positive experience. So, how do you handle the psychological side of retirement planning? Share your thoughts with us in the comments. Let's talk about how we can make this process a little less daunting. Remember, retirement planning isn't just about the numbers, it's about securing a future that feels right for you. Stay calm, stay focused, and you'll get there. At the end of the day, retirement planning is about making sure you're not just prepared for a comfortable future, but that you can enjoy it too. We've covered a lot of ground today, from understanding the retirement crisis to protecting your savings from unexpected financial shocks. But when it comes down to it, planning for retirement is really about balance. Balancing your goals with your savings, your risks with your protections. Sure, the idea of saving for the future can be overwhelming. It's like trying to climb a mountain without knowing exactly where the peak is. But as we've seen, by breaking it down into smaller, manageable steps, you can get there without feeling like you're drowning in numbers and charts. By planning ahead, you're not just protecting your money, you're protecting your peace of mind. Think about it. When you know your savings are growing steadily, when your insurance is in place, when you've got a strategy to handle things like market volatility and inflation, you can breathe easier. And that's the ultimate goal, financial peace in retirement. Retirement is not just about numbers, it's about what you want to do when you finally have the time and freedom to do it. Whether it's traveling, spending more time with family, or diving into new passions, your retirement plan should reflect your dreams. And don't be afraid to ask for help. A financial advisor can help you make sense of all the options available to you, so you can plan with confidence. After all, no one has all the answers on their own, right? So, the key takeaway here is simple. Retirement planning is a journey. It might seem like a mountain, but with the right steps, resources, and a little patience, you'll be ready to enjoy the view at the top. So what's your first step in securing your financial future? Let us know your thoughts in the comments. We'd love to hear how you're planning ahead. Well, folks, we've covered a lot today, and I bet you're thinking, whoa, the retirement crisis sounds pretty serious. And yes, it is, but it doesn't mean you're doomed to a life of worrying about unexpected financial ruin. In fact, by taking some simple steps now, you can protect your savings and avoid that dreaded last-minute scramble. Step 1. Start planning. The earlier you start, the better. No one wants to be in their 60s still scrambling to save. The key is to set realistic goals, save consistently, and keep an eye on your investments. Because let's face it, the only thing worse than running out of money is running out of time to fix it. Step 2. Diversify. Don't put all your eggs in one basket, especially when it comes to your retirement funds. A well-diversified portfolio helps protect against market swings and unexpected financial shocks. Think of it like a safety net. If one thing falls, the others can still hold up. Step 3. Don't forget about insurance. Whether it's life insurance, health insurance, or long-term care insurance, these safeguards help ensure your savings aren't wiped out by unexpected events. After all, life happens, but it doesn't have to ruin your retirement plans. Step 4. Embrace flexibility. The unexpected is bound to happen, so being flexible with your retirement strategy will help you adapt to any curveballs life throws your way. And that's the secret to financial freedom, being ready for the surprises, big or small. So remember, protect your savings, plan for the unexpected, and don't be afraid to adjust as you go. And who knows, maybe your retirement won't just be financially secure, it'll be a whole lot of fun too. Now go ahead, take control of your future, and let's show that retirement crisis who's boss. Alright folks, we've learned a lot today about how to protect your savings from the retirement crisis. Now it's time to take action. You don't want to find yourself in your golden years wondering where your retirement savings went, do you? That's where XTRM Finance comes in. We're here to make sure you're prepared, not just for retirement, but for anything life throws your way. So why not take the first step today? Hit that like button if you found this video helpful, or if you just want to be a financial genius. And don't forget to subscribe so you never miss a tip on protecting your financial future. Got thoughts or questions about protecting your savings? Drop them in the comments below. We love hearing from you. Maybe you've got a few tricks of your own or you just want to know more. Either way, we're all about sharing knowledge here. And hey, share this video with your friends and family. After all, who wouldn't want to know how to protect their savings and secure a worry-free future? Plus, you'll look like the smartest person in the room. Before you go, make sure to check out the next video on the channel. Just click right here on the screen. It's packed with more tips on financial security and retirement planning to help you stay one step ahead. Trust me, you won't want to miss it. Let's make sure your future is secure, not a financial disaster. Click, comment, share, and let's keep building that bright financial future together.